The Wall Street sees an all-round fall, cracking weak global cues. The Nifty ends above 24,050. BSE-listed companies erase market cap of nearly 9 lakh crore rupees.
Brent crude pulls back after breaching $115 a barrel, the highest level since the break out of the Russia-Ukraine war in 2022, as tensions in West Asia escalates and oil producers in the region curtail output. Prices see some relief on news reports that the G7 and IEA will discuss joint release of emergency oil reserves today.
And the Indian rupee sinks to a new record low of 92.3 against the US dollar amid a sharp rise in oil prices. However, RBI intervention manages to cap the losses.
Hello, thank you so much for tuning into Markets Forward on CNBC-TV18. This is a go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala. With me is my colleague Ritu Singh as well. Ritu, hi, and it's been again a day that we've seen red across the screen. There was no respite, so it's twinning with the color that you are wearing, and hope that changes sometime soon, but no de-escalation on West Asia. That continues to keep the markets under pressure as well.
That's right, Vinny. We want them to be in the pink of health, just like your outfit, but that is not to be. It's the second week in a row, now that, the war has not shown any signs of de-escalation, and that pressure is very much showing in the markets. You have the frontline index closing down more than 420 points. The mid-cap, the broader markets also seeing the pressure. The bank Nifty closing down almost 1,800 points. So there's pressure all around, sectorally as well, pretty much red everywhere except the IT pack. Marginally in the green, but apart from that, yes, very much under pressure. But we've got you covered over the next 20 minutes with all of this, the big news and the key developments on the Wall Street today. We've top corporate voices and events to track ahead. Let's kick off the day's market action, Vinny.
Absolutely. Let's kick off the day's market action. And with the first segment for today, we have Gaurav, who's joining us from the big wall to take us through the top movers and shakers of the day. Gaurav, over to you.
Well, yes, today, if you look at the market did recover marginally at the end of the trade. But if you look at Nifty, it is still down 1.5%. But even in this weak market, we saw some companies actually gaining in trade, and not only in terms of numbers, but volumes were also strong. We've got companies like Jindal Poly Investment, Cupid. Remember, Cupid, it was an ex-date for the company to issue bonus share in the ratio of 4:1. But apart from that, we saw companies like R System, Chemplast, Emcure Pharma. All of these companies were not only up in trade, but we also saw some strong margins. On the losing side, we had a whole bunch of stocks. First, let's talk about PG Electropast. Now, there were concerns about the LPG supply, and that's the reason why we saw the stock took a hit of more than 14%. Other than that, we also saw Misho was down in trade because there was an assessment order from IT worth 1,499 crores. Rain Industries, Suntech, Realty were another casualties in the market. And lastly, let's also not forget about Tejas Network. If you look at the stock, although it was down, in a one-month performance, it is still up more than 18%. On the flip side, if you look at ONCs and airline companies, now they did see pressure and they continued to see pressure for the last 1 month as well. Because even in today's trading session, we saw HPCL, BPCL, IOCL, all of these stocks losing in trade, even Interglobe Aviation, because crude oil prices are going up. And even if you look at the 1 month performance, all of these companies are down more than 10%. If you look at the bank Nifty, specifically the PSU stocks, those stocks were down in trade. One of the reasons was that now Maharashtra state government is going to give farm loan waivers of loans up to 2 lakh crores. And after that, we saw pressure in the stocks like Bank of Maharashtra, Bank of India, Union Bank. Even SBI saw some of a pressure in a day-to-day. So all in all, it was a weak day, but let's see what market has to offer for investors in tomorrow's trading session.
That's exactly what we're going to track. Gaurav, thanks very much for taking us through that. What should we expect tomorrow? Let's take this discussion forward with Ambrish Baliga, an independent market expert. And Ambrish, you saw the bloodbath in market today, a bit of recovery towards the end of the day. Crude prices have also recovered slightly from the dollars a barrel levels that we'd seen to now about 103 or so, thereabouts. What would you tell investors at this moment? I mean, the market's moving very fast on the back of all of these headlines that are coming in. Again, at 6 p.m. today, we'll probably hear from the G7 countries what they choose to do. But what would you suggest traders do at the moment?
No, see, I think the biggest question one should ask is how long this war will last. Because if it's going to be just 3 or 4 weeks, we are already in the second week, but if it just lasts 3 or 4 weeks, I think India can still manage. But if it's going to go beyond that, I think the first thing which will hit us is the crude oil prices, because governments don't have any option but to increase the retail prices. And that will have a cascading effect on inflation. So I think the bigger question is we need to understand how long President Trump can afford to continue with this war. So if we take a view that it should end sooner than later, yes, I think one should go long on the markets. But if you feel that it's going to last much longer, possibly it's time for you to stay out and just watch for a while.
Absolutely, Amrish point made there. Maybe just wait out and see where this is headed as well instead of rushing in. That would be the best right now to do, given we don't know how long it's going to continue. But as this war in West Asia, I beg your pardon, has continued, chemical stocks, they are feeling the heat as well. And as most of these companies ship their products through the Strait of Hormuz, and you also have exposure that comes in the US market for these companies. So now what is the overall impact? What are the important details here? Let's go across to Sonal for that update. Sonal, over to you.
Thank you so much for that. Well, the West Asia crisis is not just impacting the oil sector, it could also ripple through India's chemical sector, which has heavy dependence on crude-based materials and will be impacted by the supply chain disruption as well. Here is how some key chemical companies could be affected. So let's start with SRF first up. On the raw material supply, SRF is relatively insulated in the refrigerant gas chain. But freight could be a factor because all three of its segments export heavily to the US and the UK. Another watch point is crude. Packaging films use crude derivatives as raw material, so there could be an impact. Next, Coromandel International. This one has clear West Asia exposure. Phosphoric acid and sulfur are key inputs. Iran is among the top global suppliers of sulfur. Most phosphoric acid and sulfur shipments pass through the Strait of Hormuz. Plus, some intermediates are crude-based, so there is another impact here. Now, Deepak Nitrite is a slightly different story. Its raw materials include propylene derivatives and ammonia, both of which could face supply disruptions. Exports are limited, so freight exposure is also minimal for this particular company. But propylene and benzene derivatives are directly linked to crude, where we could see an impact. Atal Limited has a very wide raw material basket. Several of those inputs have exposure to West Asia. The company also exports across segments to Europe and the US. That means both supply chains and freight routes could matter. Crude sensitivity spread across its portfolio, so the impact is not to be seen in a bigger amount. Aarti Industries sources benzene locally, which helps. But procuring aniline could become difficult if supply chains tighten. About 23% of its exports go to West Asia and about 4% to Europe. Benzene and other crude derivatives are key raw materials for Aarti Industries. GSFC faces a different kind of risk because it relies on natural gas supply through GAIL and Petronet LNG, where GAIL has already cut gas allocation. The company also imports sulfur from Iran, and caprolactam feedstock is linked to crude. This is where there could be an impact for GSFC as well. But not every chemical stock is exposed. Companies like Navin Fluorine, Tata Chemicals, Archean Chemicals, Rallis, and Anupam Rsayan currently have minimal or no direct impact from the West Asia disruption. So while oil grabs the headlines, the real story may unfold in supply chains, shipping routes, and raw material dependencies across the chemical sector.
Thanks so much for that, Sonal. But we also have Jay Thakkar, who's joining us now from ICICI Securities. Jay, your thoughts first in terms of the markets. We managed to close about 24,000 today, but 23,800, that's an important level, and we did fall below that. So what are we keeping an eye out on in terms of levels for tomorrow, tomorrow's expiry as well? What is the key here now?
Good afternoon to you, Vinny and Ritu. See, Vinny, I would say that Nifty, yes, it opened below 24,000, wherein for this entire March series, we had the highest put base, as in, we had the put open interest highest on 24,000 levels. It did open below those levels, but managed to close somewhere above those. But, one interesting thing is that the IVs have spiked quite a lot, and this, volatility spike ratio is generally what I track very closely in this kind of panic situations, Vinny, and that has reached to 1.5 today, 1.5 to 1.52. Generally, during these kind of panics, you see this volatility spike ratio to inch towards 1.6, and typically around 1.6 levels is where you see the index bottoming out, at least for the short term. So for this, in this week, and probably either today might have been a short-term bottom, or Vinny, I think that in this week, you should be having a probable bottom, at least for the short term, from where you could at least see 4 to 5% kind of a jump on Nifty. Why I'm saying this is that historically this is what has been proven. that around 1.6 volatility spike ratio is where you see the short-term bottom. Today, IVP and IVR, that is the IV percentile and IV rank, has also reached to 99 levels. I mean, those are indicating quite oversold regions as of now. So in the short term, meaning what I would like to say or sum it up is that I don't see Nifty falling below 23,200 on a closing basis until unless there is a meaningful bounce back. So, if at all you have to see a downside risk from the current levels, max I see is 800 points in the short term, not beyond that.
All right, Jay, take that point. Amrish, on the chemical space, any thoughts? I mean, like you said, we don't know how long the war will go on, so it's hard to, pinpoint a certain level. But do you see any opportunities to, buy in that sector?
Yeah, I mean, on a decent correction which you have seen, I think there is an opportunity to buy. But then I think one should look at the ones where at least there is some amount of backward integration which has happened. For example, someone like a Coromandel. I mean, they have about 50% of the raw material requirement. There is some backward integration. So that could be one of the picks. Deepak Nitrite, Atul, I think these are the ones to be looked at. RT, I think, is the other one where clearly I think... over the next at least 3 or 4 quarters, we should see possibly better earnings. It may not be this quarter because of this issue, but going ahead over the next 3 or 4 quarters, we should see better earnings.
Point taken there, Amrish. But let's move on and also, talk more about the Brent crude oil prices, which have been soaring. They hit those $115 above that mark, and its highest level that we've seen since that Russia-Ukraine war in 2022. However, the prices saw some bit of a relief on reports suggesting that the G7 as well as the IEA could discuss a joint release on emergency oil reserves. Let's go across to Manisha Gupta, who's here to explain us more on this front and give us more details. Manisha?
Well, crude is absolutely on a boil after 20% gains on Friday. We've seen Monday opening at around 25% on the higher side. Crude seems to be making some sort of records across here. Interestingly, from those kind of highs, there's a bit of a profit taking that you have seen in the markets. This is after statements coming in from various reports that G7 is looking to discuss the joint release of emergency oil reserves. Now, the markets do believe that this is going to take time, but at least the intent itself is something that has led to some premium going off to prices. Let me remind you that the prices are trading at the highest since 2022. That is when the Russia-Ukraine war took over. The other thing also is that even as the US-Israel conflict with Iran enters into day 10, it really is about not so much about the damages on the energy infrastructure, but the kind of statements that we've heard coming in from various Gulf countries suggesting that they're looking to cut output. You have similar statements from Middle East producers like Iraq saying that output from 3 southern oil fields is facing a 70% decline. UAE says that they're managing offshore production to address storage needs. Kuwait has said that it is cutting oil production and refining as well. Saudi also seems to be diverting some crude to Red Sea. And then you have a JP Morgan statement saying that if the Strait of Hormuz remains shut more longer, then we are looking at 4 million barrels per day of a loss to the global markets therein. We have seen the prices gain up quite strongly. But let me remind you, 1st of January was $60 a barrel. March 27 was $70 a barrel. And we've seen 117 barrels day to day. So it has been really a 70% of a jump up that crude prices have seen in this year till time.
Manisha, thanks very much for putting that in context. $60 a barrel is what we started 2026 with. Look at where we are now. Jay, just finally wanted to get your thoughts. I mean, ignore all this noise because the headlines, like I said, they're flowing in thick and fast. Where in the markets are we right now? I mean, are we closer to the bottom? Markets just taking a breather? Will we see a recovery? Or will you avoid fishing in these shallow waters? What are the charts telling you?
Well, Ritu, I would say that historically what we have seen in last 15 years, since when you actually compare these kind of events, what we have seen is from the peak, wherever these kind of events or negativity starts, or from wherever the volatility starts increasing, Ritu, from there generally you see Nifty falling by almost 10 to 11%. And if I see that from 25,600, then I think the bottom should be closer now. Hence I mentioned the levels of 23,000 to 23,200. I don't see Nifty falling below those levels because we haven't seen Nifty falling more than 11%. And so far, by if you include today's fall, then I think we have fallen by almost 8%. So not more than 3%. I think there should be a downside from current levels. Second point is that Ritu, it's not been more than 27 days, whenever we have seen these kind of events happening. So the consecutive or continuous fall or a downtrend has not been more than 27 days. That includes the holidays as well. And with today, I think we have already completed 19 or 20 days since the volatility has started rising. So I don't see more than a week for this short term to come into place. So 1 week's time, not below 23,000. That is what I would say. On the upside, yes. We have seen 25,000 levels now having the highest call base. So I think the range for the next 2 weeks should be 23,200 on downside to 25,000 on the upside. And the last thing which I would like to add is that the FI net shorts have now almost reached 1.8, 1.85 lakh contracts. And it has not gone to 2.1 lakh contracts. So it's also quite near to that. So maximum downside risk is 3% is what I see.
Okay, Jay, thank you so much for, highlighting those important levels for us as well in the next few weeks, hoping that this volatility ends as well. But Jay, as well as Amrish, thank you so much for joining us on the show as always. And viewers, on that note, we're going to actually step into a very short break. We'll get to the top corporate voices along with key market events to watch out for on the other side.
Welcome back to Markets Forward. Let's get you some top voices of the day. Soham asset manager Sanjay Parekh believes there are pretty good opportunities in large caps and that the metal sector looks resilient in the current environment. That's not all. We have Nuvama Asset Management's Nikhil Vanka, who asserts he doesn't think markets have much downside from here. Take a look.
To start with, we are at 75-76% large cap. And after this reaction, pretty good opportunities in larger cap, across a lot of choice. Another key point, we've seen crisis, Spain crisis, Greece crisis, Brexit, Ukraine war, and then, of course, last year when there was war again between Israel and Iran. And then we realized that all throughout, if we react when there is pain and sell out, it's absolutely, it doesn't help. You have to go through the pain, and the size of pain can be different. At least what we're doing is changing a bit, pivoting a bit, not changing our strategy overall. And, like at least the largest market cap company, HDFC Open, we added to that because we believe is far better placed. They will also have impact, but at least it's better placed. So there's a little bit of pivot, but no change in strategy that we have. Longer term, I think at least the government now should seriously have a policy which incentivizes E&P, which I've been tracking oil and gas for 30 years, and I've always been disappointed that we didn't have a policy which attracts investments in E&P, which I very, very strongly believe will happen. Which is far more, attractive for potential investments in E&P.
Okay, so you're not changing the strategy too much, but shifting a little bit in what way, Sanjay? You said?
Yeah, so we added the largest conglomerate, the largest market cap company, because it's an integrated player.
Yeah.
It has an exposure to E&P.
Yeah.
If the cycle and this is assuming crude doesn't remain at 60, neither it remains at 120. If it comes down midway, then the cycle petrochemical spreads for integrated player can get better. Definitely, the demand impact we need to see, but at least we believe they would be better placed because they also have an upstream presence. And then telecom is almost, not affected by that. Retail certainly from a sentiment perspective will be affected.
Nikhil, at Nuvama Asset Management, are you all aggressively buying? If yes, what?
So yeah, we are now, we do feel that the markets don't have much downside from here. So Rima, if you typically look, whatever be major uncertainties, markets have typically bottomed in the first 7 to 10 days of those uncertainties. If you take the example of COVID, we bottomed out when we had the first 1 lakh cases of COVID. If you take Russia-Ukraine war, within the first 15 days, markets made a bottom. If you see even the Trump tariffs that happened last year, he announced the tariffs on 2nd of April, and we bottomed out around 9th or 10th of April in that sense. And this time around, if you see the starting point of valuations, we have been highlighting that 17 times 1 year forward is where markets typically bottom out. And even if you conservatively take 1400 rupees as the EPS for FY28, then today at 23,800, we are close to 17 times that number. And this time the earnings uncertainties, so to say, is not that clouded, except for OMCs and to a lesser extent aviation. Rest of the sectors are not so much affected this time around. And my sense is this uncertainty should not last for more than a month in that sense, because it's not that any production facility has got disrupted. It's just that, logistics have got constrained. Once we have things moving from the Strait of Hormuz, then the recovery itself can be very swift in the markets.
Got that. Nikhil, so what have you at the margin done?
So we've not changed much. As I said last time, we were overweight on banking. We still continue with that overweight on banking. My sense is aviation is getting to a point where probably, larger names, one can look at it, because if margins stay at these levels, then obviously the other two players were loss-making. That will put further pressure on them. So I think aviation is something that is starting to look incremental attractive. And at some point of time, I think 10-15% lower, even OMCs will make a strong case in that sense, because this looks more a temporary disruption rather than structural long-term dislocation in that sense.
Never heard you talk about OMCs, Nikhil. That's a new one. 10-15% from here, lower from here.
At a price, everything is good, Prashant.
Yeah, no, absolutely. Absolutely. Sanjay, you mentioned one name, but I mean, anything else where you think there is too much dislocation which has happened, and maybe just by sheer numbers, it just is looking very attractive?
See, if we assume that it's not going to get prolonged,
yeah. Look, the markets are assuming this is going to last, this fight will last for about, the general consensus is 4 to 8 weeks, is what we're 10 days in, right? So
then I think a lot of options you have now, the entire financials, ICICI Bank, because we know some of it is led by selling, which is forced selling, by some redemptions, by some sovereign funds, so these fundamentals, they're not going to have issues on asset quality. And now with, inflation certainly will look up. So interest rates have bottomed up, and you're getting the same stocks at almost at 5-7 year low price to book.
An interesting chat there coming in and updates coming in from top market voices. But with that, we're going to wind down this edition of Markets Forward on CNBC TV18. Thank you so much for tuning in. We'll come back with more on news and updates on the other side. But it's a goodbye from Ritu, myself, as well as the team who put this show together.